But you have numbers for HUL flashing for you on the screen, and they look bang in line with expectation to a tad bit better. The profitability has come in at 2,510 crores. We were working with a number just higher than 2,500 crores, so bang in line with expectation. Even if you look at the EBITDA margin, that's coming at 23.6%, in line with our expectation, while the revenue profile is a tad bit better because there's a growth of 16%. We were working with a growth of around 14%. So there seems to be a bit of an improvement as far as revenue is concerned. Margin is in line and the profitability too is in line. In terms of the volume growth as well, the volume growth is at 5%. That is exactly what the street was penciling in. The stellar performance actually comes in from the home care segment, which has actually delivered revenue growth of 32% and a double-digit volume growth there. Beauty and personal business has grown by around 10%. Again, a double-digit growth in terms of volumes being in high single digit. Its operating margins, which continue to be healthy. They did talk about inflation moderating this quarter, and they say that they have managed their business dynamically with ensuring the right price value equation as well. Sanjeev Mehta, the director, says that they are sustaining their strong momentum and they have delivered another strong quarter. Looking forward, they're cautiously optimistic in the near term and believe that the worst of inflation is behind them. So I think that will be the important commentary to watch out for. Cautiously optimistic in the near term, worst of inflation is behind them, and they're also talking about a gradual recovery as far as consumer demand is concerned. They're quite focused on their business with respect to moving with agility. They also talk about margins being maintained in a healthy range, and they say that they are confident of the medium to long-term potential of the Indian FMCG sector. So that's the key positive, I think. Very good, good to inline set of numbers coming in. The top line growth of 16%, margins at around 23.6%, volume growth of around 5%, and the profitability at 2,510 crores is in line with expectation. Plus the commentary from the management with respect to the optimism in the near term, worst of inflation being behind, as well as gradual recovery would be liked by the street. I think we'll have Vinny as well as analysts joining us to pass us through the numbers. But for now, I think it is a good set coming in, and given the fact that stock was a tad bit subdued going into the numbers after Asian Paints reported a bit of a disappointing set, there was this worry whether the urban consumption is actually slowing down or not. That doesn't seem to be at least trickling in as far as HUL is concerned. So inline set, not a very big positive surprise coming in, but just because the positioning of the stock was a tad bit negative and that revenue has come in better than expectation at 15,228 crores, my guess is that this will be taken well by the street because there's not much to complain as far as the numbers and the first cut is concerned. Shrishti, anything incremental that you want to spot?
Well, yes, everything has been highlighted by you, Anisha. So we'll wait and watch by how is the management commentary, especially on the rural versus urban demand. And this time the expectation was actually on that the growth will be led predominantly by prices. So how are they seeing the volumes to catch up, especially in the rural area? So we'll be watching out for the management commentary on that front. They have a presser and a con call presser in next couple of minutes and a con call around 6 p.m. But before going to that, let's get Vinny Motiwala, who is here to decode all the numbers of HUL for us. Take it over, Vinny.
HUL overall as of now seems like an inline set of numbers that had come in strong. All-round performance is what the company has highlighted, and underlying volume growth is coming at around 5%. It is what we were expecting. So revenue in line, profit in line, margin in line as well. Now overall, let's look at the home care segment seeing a solid performance around 32% growth, double-digit volume growth is what the company is highlighting that they've seen over there. And obviously the company has taken calibrated price hikes in this home care segment, in the detergent segment as well. So obviously that is a factor that comes into play in terms of the pricing led growth over there as well. Beauty personal care segment also has delivered a strong performance this time around as well. 10% growth is what they are seeing coming in terms of value, and a double digit growth in terms of the volume as well. Mid single digit growth actually is what is coming in for beauty and personal care over there. So keep an eye out on that as well. And what the company is also highlighting and what I'm reading in terms of the portfolio coming in over there is that the food and refreshment segment also has done quite well, especially the food business, coffee and ice creams has led the growth for the company. Now in terms of the operating margins also, yes, we are seeing the operating margins at 23.6%, which is improved by mild improvement that we've seen coming in over there on a year-on-year basis. And the company said that given that the company's dynamics on the cost saving measures, they could continue to see a growth coming in terms of the margins and improvement in margins going forward as well. So keep an eye out on that. As of now, this is the first cut coming in terms of the numbers, a good set of numbers. Looking forward for an optimistic and a near term, cautiously optimistic on the near term as well, is the commentary coming in from Sanjeev Mehta.
As HUL is concerned, and remember the stock still trades its expensive valuation. It's of course come off materially from the levels it was trading at earlier, but it's still 60 times FY23 earnings, almost 50 times FY24 earnings, and the street was penciling in a lot as far as the premiumization and the rural recovery is concerned as well. Let's get on board Abneesh Roy to pass through the numbers as well. Abneesh, a very inline set of numbers, 5% volume growth, margin at 23.2%, and the commentary as well is talking about how inflation or the worst of inflation seems to be behind us.
Absolutely. So thanks. Overall, good set of numbers given the situation in Q3. So 5% volume growth is a good number. It's exactly in line with our expectation, and it is well ahead what Nielsen growth rates are suggesting. HUL continues to gain market share in 75% of the portfolio. Also, HUL has seen sequential improvement in EBITDA margin. Our sense is in Q4 there should be even more improvement in margin versus Q2, and definitely worst is behind on margin. Rural demand continues to be a challenge, but HUL is still doing quite well in most parts of the portfolio on a pan-India basis. So, beauty, personal care, double-digit growth, home care, almost 32% revenue growth, double-digit volume growth. So, that has done really well. Foods also has done reasonably steady performance. So, we remain quite positive, and this will be one of our top picks for the FMCG space in the coming year.
Just before we talk a bit more about numbers, I want to highlight an important announcement coming in wherein HUL board has approved the new royalty arrangement with Unilever Group. So as a result of that, in the new agreement, the royalty and central services fees will increase from 2.65% that it was there in FY22 to 3.45% of the turnover, and the increase will happen in a staggered manner over the course of next 3 years. Abneesh, how would this impact your estimates? Will this be a material event?
Yeah, so we would need to study that because it's been just announced. But as you said, if I go by the data which you have suggested, we need to look into it. But being over 3 years and maybe just 60, 70 bits increase, I think it's not a major issue, but we'll have to check. But yes, as I said, the margins will improve because commodities have pulled off. So I don't think it's a major concern, but we'll have to see into it.
Feels that the worst of the margins is behind HUL. But let's move on and connecting with another analyst. We have Naveen Kulkarni, who is the Chief Investment Officer at Axis Securities. Hi, very good afternoon, Naveen. Thank you so much for joining us today on ET Now. What is your first reading on HUL numbers, and how are the numbers as per your estimates? Do you also believe that the worst of the margins is behind HUL now? Okay, so we'll connect with Naveen in a short while, but meanwhile we have Shirish Pardesi, who is the senior analyst of FMCG at Centrum Broking. What is your reading, Shirish, on HUL numbers? How do you see this? Because today, just ahead of the earnings, the stock was under pressure, but going ahead, if the outlook is on the optimistic side, do you expect the stock to react positively? Because the stock is not very far from its all-time high levels.
Yeah, I think thanks for having me on the show. There are two things. One, we can read and dissect from the results that the home care business is all on strong footing, and in sequence last 4 to 5 quarters, it's shown a very resilient performance. What we do understand that after the COVID period, there is a strong uptick which has happened. People have moved from detergent bars to detergent powder, and I think that is clearly a premiumization story is working, and that has reflected into the margin also. Second, on the beauty and personal care, I was slightly disappointed. Of course, understandably, the winter season has slightly delayed. But going forward, beauty and personal care is one of the important business and also has a higher strong gross margin. And looking at the tailwinds from the falling commodity prices, I think we can estimate that the margin has bottomed out, and there is a further room for looking up from here. The last part which is there is that for long time the company has been trying to ramp up and scale up the food business. I think my sense is that with the with the improvement on the earnings power, and I think with the economy coming back, I think food business will also start showing in the numbers. So I'm pretty positive, though number did surprise slightly. We were expecting about 4% volume growth. It actually has been reported by 5%.
Before I let you go, I want to ask you the same question as far as this new royalty arrangement is concerned. How big an impact could it have? Because it's been increased from 2.65% in FY22 to 3.45%. It will happen in a staggered manner over the course of next 3 years. 45 basis point from February to December 23, another 25 basis point from January to December 24, and then 10 basis point further from January 2025 onwards. Will this mean that you'll have to tweak your cost estimates and expense estimates for the company as well?
We did. We need to look at the numbers, but on a prima facie, when I look at the Unilever world, India is one of the key geographies, and at many occasions, the parent has said that there are a lot of efforts, and India market is going to grow faster. So obviously, I'm not getting into number per se what the royalty it means, but I think there was the India market is key growth driver for the Unilever parent. And I think we will see that how that impacts. But looking at the parent's intervention and the benefits and the background on which, whether it is IT infrastructure or even brand expertise, I think that could be justified.
I think we also have Naveen Kulkarni joining us. Naveen, just wanted to get your sense first word as far as number is concerned, and given the fact we went weak into the earnings, are you expecting a bit of a sharp reversal tomorrow?
Yeah, so two things. One is numbers are definitely better than expectations. So 5% volume growth is quite healthy in this environment. Secondly, the earnings is also better than our expectations. Revenues are better than expectations. So all around earnings are pretty good. But I think the important factor that here will be the increase in royalty payment. I think that will have an impact on the earnings, right? So going ahead, so if I were to look at, let's say, the total increase is to the tune of around 80 basis points over the next 3 years, probably the first 45 basis points coming up in the next year, that will have an impact of around 2 to 3% on earnings is what I feel. So that will result in earnings cut. So overall, putting all these things into context, I don't see material upgrade in earnings happening for HUL. So I'm not very sure whether the stock will have strong reversals tomorrow or it might be flattish. So that would be my take as of now.
Helps us a lot, Naveen, in getting a sense as to how things stack up. So while the revenue and margin profile has been better this time around, there might be 2 to 3% cuts on account of this royalty change, and that will negate itself. And that's why perhaps the impact tomorrow will be limited. Just before we let you go, Naveen, any other internal that you would want management to highlight a bit more about? Any commentary that you're looking forward to specifically?
Yeah, so most important aspect will be the recovery in rural demand, because that's a very key aspect, because this is a year where expectations are that rural will be should improve through the year. So that is the key number that we are very much watchful about. So rural demand, I think, is something that we are focused on.
Thank you so much for joining us. We let you go on that note, as well as Shirish and Abneesh. Appreciate you joining us on the show and telling us how the numbers look like. So HUL broadly in line of set of numbers, top line a tad bit better, margins at 23.2%, volume growth of around 5%, and the profitability as a result of all of that at 2,510 crore. Internally, in terms of the various segments, the performance has been quite healthy, and the street will now just watch out for this royalty arrangement changing, because that would impact the estimates a tad bit. So we'll wait by first to get more commentary on that. But with that, it's a wrap on the special editions of the earnings coverage of HUL as well.